Welcome, ladies and gentlemen, to the Precious Metal Summit Conference here in Zurich Commodity TV. And we are happy now to get an update from Talisker Resources, and Terry Harbort, the CEO, is here. Hey, welcome. Good to see you.
Thank you very much. A pleasure to be here.
Yeah, thanks for taking the time. We are not talking about whiskey. We are talking about gold production.
Absolutely.
And that's the great thing. You have the Bralorne Project, and I would even say you are really high-speed miners, because only 5 years from discovery now to production. And in the first quarter, you will really start, right?
Yes, look, it's been a fabulous journey, and I must compliment our team. They've put a lot of effort in, and we've done really in 5 years an incredible thing, taking our resource here from 100,000 ounces up to 1.7 million, going through all the process, making sure our permits in place, making sure our Indigenous partners are aligned, and then finally closing our financing. So really in 5 years, we've had an incredible journey.
Super. Okay, so Q1 is the production start. To what extent now you have finished the construction?
So we've completed earlier this year a portal construction. So that was enlarging to 4 by 4 meters and 650 meters worth of decline development. So that's coming in from the surface down to where our veins are going to be. The next phase now that we've finalised our financing is for the mining contractors to develop sub-level access. So as we're long hole mining, we do our development in the veins. So that's a bigger, about a 3 by 3 metre development, and then we're able to stope upwards into the veins from there. So we've got about a couple of months of work to do to get that done, and then we're into those veins and into the full gold production.
Okay, super. And you have your own mill, or how does it work?
So we're looking at a bit of an innovative approach. We're looking at using the infrastructure that's around us and trucking to other facilities, so other people's mills. Fortunately for us, we're located in South Central British Columbia. So it's some of the biggest mines, particularly open pit mines in Canada, are located in this region. We're connected to these areas by highway, so good highway access. So we're very fortunate to be able to truck to existing facilities. So at this stage, we've got 2 agreements lined up to remote process our material in other milling facilities. And we're looking at another couple of agreements, and potentially one agreement where we can lease our own mill and operate it. So we're really looking forward to that and hopeful that we can get that done. Okay. But at this stage, a lot of optionality for us, a lot of security, and a lot of optionality as to where we can send our facilities. And also a greatly reduced CapEx and timeline. It doesn't take us 5 years to permit our mill. It doesn't take us 200-300 million. We can get into production and see cash flow.
Okay, super. Yeah, I saw you had also a news release, I think it was yesterday even, or 2 days ago, that you have done, you upsized the convertible note. So for what is that money? That $22.6 million, right? Yeah,
so most of that money is going into our development and our mining. So the pathway for us is to get up and as soon as possible get into cash flow positive. And really that's what that capital's for. If additional capital comes up, considering how terrible the markets have been for capital the last couple of years, it's always good to take it. Mining can be a risky business. There can be a lot of unknowns. So it's always good to have a cash buffer there as you're initially going into production.
Yeah, absolutely. So let's assume everything goes the way you wanted. Q1, you can really start with that. What do you think could be mined, meaning production ounces, and where do you see the costs coming in? I know forward-looking statement for the regulars, but just thinking about what might be a range or possible.
Yes, of course. Well, I'll tackle the all-in sustaining at the moment. We're looking at about a 1,400 US, 1,400 US. We're just recalculating all of those figures now because, of course, the gold price is a lot higher than when we did our economics. We did our economics at sub 1,900, and now we're looking at above 2,600. So there'll be some changes there with our cutoff grade and our costs. But really, we're looking around that 1,400 mark, including our trucking and transport. So. Very good high margins, mainly related to our high grade, what we're looking at there. Yeah. In our production rate, as we're funding our development here with cash flow, We're not going to market and raising a large amount of money. We're funding it with what we produce. So we're taking a steady approach. In the first year, we're looking at about 150 tonnes per day production, and the next year following off from that up to 200, then to 5, and then to 750 tonnes per day. So a very conservative, steady state approach that we're taking. In this first year, our estimate is sort of in the 10 to 15,000 ounce range, and then over the next couple of years, we're building that up to about 100,000 or a bit beyond 100,000 ounce per year production. And really, we think from then on, life of mine will be average around there. Yeah.
Okay, super. But that would also mean that your unit costs will go down. So maybe
Yes,
the
of course.
1,400 could go a little bit lower, right?
Yes, we think so. And also our plan is once we build up a cash base to then look at putting in our own milling facility at the site. So that'll reduce our trucking costs, reduce our remote processing costs, and increase our payable, increase our recoveries. So it'll have a very good impact on our economics. And we see that economics then should start drifting down to about the 1,100 US per ounce mark.
That would be very good, I must say. I think the world average is like 1,500 now or something like that.
Yes.
So that would be great.
Yes, look, it'll be very good. And to be able to balance that CapEx requirement with our all-in sustaining is really what we're trying to do. Build a very good business is what we're trying to attempt.
Okay, super. Let's look a little bit further to exploration. I think you have several old mines, several old projects also on your land holdings. So what would be the idea there for the future?
Well, very fortunately for us, that there's a lot of historic work that's been done, historic drifting, sampling, and I think we've got a database of about 45,000 drift assays that have been defined there. A lot of that goes to depth. We know the veins have been confirmed to at least 2 kilometres depth, so well beyond where our current resource is, which is sort of surface to 700 metres. In addition to that, we've defined a lot more veins. Historically, only 30 veins were mined. Our resource is now based on 86 veins, and we know that 75 of those are open in all directions. So there's an incredible amount of upside. This style of deposit, a mesothermal or orogenic style of deposit, generally there's no drop-off of gold at depth, and we actually see gold grades increase with depth as we get down. So it's expected that we'll be able to mine this to 2.5 or 3 kilometres.
Wow. That's
a lot of upside.
Yeah, upside, and I would say also a long-term future for the company.
Yes, I think so. Well, we see Bralorne, it's the longest producing gold mine in Western Canada, was in production for 40 years.
Wow.
4.2 million ounces produced at nearly 18 grams, 17.7 grams. And our honest belief is that it'll be in production for another 40 years.
Super. Wow, fantastic. So maybe you can do that easily again.
Hope so.
That's great. Last question. I mean, we spoke about money. That's all good. You are in the mode to generate money. Who are your largest shareholders?
Our largest 3 or 4 shareholders, the biggest one is New Gold. They're at about 11% with rights to go back to 14.9. So they're a strategic cornerstone. Outside of that, our biggest ones are mainly funds, Franklin Templeton out of the US, a group called Arbiter Partners, who both own in the fund and their principal as well. And some other groups, also Merck, some of the Sprott Group, and Equinox Partners, a resource group out of Connecticut.
So very stable shareholders.
Yes, very stable shareholders.
Fantastic. So I wish you well for the production start, really.
Thank you.
I mean, do it because we need much more gold in this world. Gold is in a deficit, definitely. And keep us posted. Thank you very much.
Fantastic. Thank you.
Super. Thank you. Yeah, ladies and gentlemen, that was Terry Harbort, the CEO of Talisker Resources. And you heard it. This is the next gold mine here in Canada, in BC. And small production start and then do it staged. I like that because it's much better if there is anything which has to be adjusted, much easier to do it at a production of 15,000 ounces rather than at 100,000 ounces, that's for sure. But I like the model. Well done. And the company is financed. Everything is there. And next year they start to make money. So check out the company. Thanks for watching us and bye-bye from Zurich.